Are you thinking about refinancing to consolidate debt? This video is especially for you. Should you do it? Should you refinance your current mortgage to consolidate your debt? In this video, I'm going to go over some pros, some cons, and give you a little bit of advice from a mortgage professional. All right, Matt, the mortgage guy, residential mortgage broker, licensed in 47 states, powered by You Mortgage. Go to greatmortgagebroker.com if you want to connect me and my team and get started. In today's video, I'm going to talk about refinance. I haven't talked a lot about it because, truth be told, over the last couple of years, I haven't wrote a lot of refinance. In a market with rates trending up and all of the refinances we did in 2020 and 2021 with historically low rates, there hasn't been a need. And quite honestly, it hasn't made sense for a lot of people to refinance. With consumer debt at all-time highs, there is going to be a certain segment of the population where it makes sense to do a debt consolidation refi, even if it does increase the rate on your mortgage. Now, before you throw tomatoes, before I get a bunch of keyboard warriors telling me I'm a complete idiot, making a video because I want business, I'm the first one to tell people you don't necessarily want to do a cash out refinance and increase the rate on your mortgage, in order to pay off debt. Prime example of that. You've got $400,000 mortgage that's at 2.75%. To go out and do a cash out refinance to pull $15,000 or $20,000 to pay off a debt would be silly. It would be ludicrous. I would never recommend that. But there's going to be a vast array of scenarios, and some of them are going to make sense. I look at loan level data, and I've actually got a buddy of mine that gets data on where these cash out refinances are being written. I would rather have you see this video, contact me and my team, let us give you an honest review, than have you go to one of these shops, which I know it because the data shows it. The Rocket Mortgages of the world are targeting you. And by you, I mean somebody who's got debt to pay off, somebody who's probably in a position where you've got a lot of equity in your house, and they're going to sell you no matter what. They want you to refinance no matter what. I, generally speaking, say no to 9 people and then say yes to 1 out of every 10 people I'm talking to in 2023, because it just doesn't make sense mathematically to do a cash out refinance, a debt consolidation refinance, except for those 10% of people, it does make sense. And for the other 9, I want you to talk to us so we can tell you, no, it doesn't make sense. Go look at other options, maybe put together a plan for aggressive debt payoff, but don't refinance. I want to talk to those 9, and I also want to talk to the one that it might make sense. Everybody's scenario is a little bit different. I just looked at one today, and although their current mortgage is at 3.7% and our proposed refinance is at 5.99%, the amount of debt load they have and what they owe on their first mortgage, this refinance makes a lot of sense. Paying off a $28,000 Visa, paying off a $34,000 MasterCard, paying off a $45,000 vehicle loan, and paying off a $50,000 student loan. All in all, it's going to save these people about $1,400 a month. And here's where the magic can truly happen, is if they do this refinance and they create better habits, right? The habits that don't put $28,000 balance on your Visa card, the habits that don't create a $34,000 balance on your MasterCard. A lot of people that are in this scenario are upset that they are, but they have a chance to reset. And as much as somebody would argue, never go from a 3.7 to a 5.99, a couple things to consider. 5.99, you're not going to be in this loan for 30 years. Very few people are. So looking at the interest cost over the next 26 years on your current mortgage, over the next 30 on this new mortgage, is really a silly metric to look at because nobody stays in their loan for 30 years. Again, I'm not advocating it's going to make sense for everybody, but for some it will. For somebody who has a low mortgage balance, $120,000, a ton of equity where they can pay off another 100,000 or 120,000 in high interest. I think the Visa and MasterCard are both above 20. I think the vehicle loan is a double-digit percent in interest on the vehicle loan. And so it's going to put them in a massively better spot. I'm going to do my best to do a little coaching around what they're going to do with this newfound monthly savings, not paying these high interest payments. They're either going to plug it back into their mortgage and get their mortgage paid off in 14 years, or they're going to plug it into an investment that's going to set them up for retirement. Debt consolidation refinance is going to be back. It's going to be back, maybe not in a major way, and for a lot of people, but for those who have accumulated debt for one reason or another that are part of this growing number of consumer debt reaching all-time highs, use your mortgage and the equity in your home as a tool. Like most tools, there's good ways and bad ways to use them. You don't want to use a tool like debt that cuts your neck and you bleed out and die. Not what we're going for, right? But you can use this powerful tool of debt to set you and your family up in a better financial situation. The key is there's not enough time in one of these videos to go over the million different scenarios where yes, it makes sense here. No, it doesn't make sense here. You have to contact someone who you trust enough to put your cards on the table and say, here's exactly where we're at. And then, like I said, 9 times out of 10, I'm likely going to say, maybe consider yourself getting a HELOC for $20,000 and aggressively pay off that debt and leave this mortgage alone. Or maybe you want to not get any more debt and just create a plan that says $1,500 a month, I'm going to aggressively pay into this and have this debt paid off in the next 12 or 18 months. Whatever the case may be, getting yourself some financial advice that starts with your biggest debt, but also your biggest asset in your home that can be an asset is a good place to start. So hopefully this is helpful. Again, greatmortgagebroker.com. If you want to connect me and my team, we're licensed in 47 states. So chances are we're licensed wherever you're at. Greatmortgagebroker.com. Look forward to talking to you soon.